Hello and welcome to this edition of China-U.S. EconTalk, live streamed on CGTN's global digital media platforms. I'm Guan. It's been a tumultuous year for China-U.S. relations, although tensions remain high between the two countries for most of 2021. Things improved in November with a virtual meeting between top leaders. Now, how should the two countries build on the momentum to address common challenges, such as the Omicron variant, inflation, and climate change, and avoid competition from veering into conflict? To delve into these issues, it's our honor and pleasure to be joined by two renowned economists from both countries, Professor Michael Spence from New York University and Nobel laureate in economics, and Professor Justin Lin, Dean of the Institute of New Structural Economics of Peking University. Welcome to the show, and thank you both for your time today.
Good to be with you.
Well, it's only a couple of weeks to go before the new year. So, Professor Lin and Professor Spence, would you please use one word to describe the year of 2021? And what's the outlook of world economy next year?
Well, maybe Professor Spence will say first. He's my senior.
Okay.
I would use the word roller coaster.
I'll use the word depression.
Would you please elaborate, Professor Spence? You first.
Yeah, I mean, in the first part of the year, I thought, China had successfully contained the virus. We were in a very rapid recovery. The United States and the developed countries had a vaccine rollout. It was starting to gain momentum more broadly in middle-income countries. And so I thought we were, on the way to recovery. And then the second half of the year arrived with the Delta variant, huge negative climate events, the supply chains clogged up, and a whole lot of other things that felt like, a roller coaster. We're up, we're down, we're up, we're down. So that's how it felt to me.
What about next year?
Next year, I'm, somewhat more optimistic. I mean, I think there's a reasonable chance that we'll get the virus under control. And move on to some really important areas of cooperation. I mean, it's easy to have a negative view of that because we've been going the opposite direction for some time. But I think there's a growing awareness that there's some really important problems and issues to challenge where we have common interests. We have an inequality problem. Common prosperity is an important idea. The list. I won't list it now, but there's a long list of areas where we have common problems and could benefit from cooperating with each other and solving them.
Indeed, it's very important to build consensus and work together. And Professor Lin?
Well, I think that the pandemic has lasted much longer than we expected, and it has been almost 2 years now.
Right.
And we are still under a new threat and so on, like Omicron. And because of this concern, the economy has been affected. The life has been affected much longer, much severe. And many people, like Professor Spence and myself, I think that our mobility was severely restricted. And I think not only for people like us in academics, I think also in the business community and daily life, and as well as the economy, was affected negatively in most parts of the world. So I think that overall, I think it's quite depressive.
What about your outlook for next year? Are you also optimistic?
I think that there's a good chance to improve because now we understand the threat of this pandemic much better, and the willingness to cooperate, I think, will be enhanced. But because of the high-income country, they have basically vaccinated all their population, and they also have the capacity to produce vaccination for the developing country. And we also see facing this kind of global challenges, unless we cooperate and left no one behind, otherwise the threat will be there. And the lesson will also help people to see the benefit of cooperation. And also, like the US and China, in the last year, the tension was quite, in a way, getting worse. But at the end of the year, we see the virtual meeting between the president of both sides, and we also was able to sign joint statement for the climate changes. So there's some good sign for next year, and I hope this momentum will be maintained.
Right, so both of you stressed on the importance of cooperation. We know that 2 years on since the pandemic, the world economy is still not out of the woods, and new coronavirus variants, as you mentioned, and also complicated by supply chain crisis, inflation, and these challenges could still derail nascent recovery. So what can be done to facilitate world economic recovery, especially by China and the US, the world's two largest economies? Professor Spence?
Well, the item one we've already talked about, which is get rid of the pandemic. So at least its contribution to kind of continuing problems in the supply chain, like closing ports, like, shutting down certain manufacturing facilities, et cetera. That's kind of item one. I mean, beyond that, I think it's going to take a while for the supply chains to get uncongested. There's a lot of talk about, we're going to solve this problem in the longer run by sort of doing everything ourselves, the self-sufficiency argument. I mean, there may be a little bit of that in strategic areas, like medical supplies and whatnot, but that's not really the answer. The answer is that the supply chains were wound too tightly. The pandemic made it worse, because everybody in the supply chains went into survival mode, right? So you don't carry excess inventories when you're trying to keep your business from failing. And so once again, I mean, I think, where we need to cooperate is in finding ways to make the global supply chains that we're all dependent on less prone to adverse shocks, meaning less able to adapt to big shocks like this. And one of the ways we can do that is, look, if you look at these global supply chains and networks that Justin knows extremely well, they're highly decentralized. They're constructed in a highly decentralized way. The emphasis on efficiency and just in time, this and that, is way too high. And we have no visibility. There's nobody on the earth who can see the whole picture. There's just no database that allows you to do that. So we can cooperate on changing that situation. We can create incentives for resilience and capacity to absorb shocks, and we can cooperate on creating data that allows us to early detect when this system is starting to get under stress, and so people, countries, but businesses can start to adapt. So there's a lot of work to do, but in the short run, we can't solve all these problems. We're just going to have to live with the fact that, we're short of semiconductors, period. No way around it.
Right, and supply chain is also very important to China because China is a crucial link in the global supply system. Professor Lin, what do you think about the supply shock, the pressure of supply shock mentioned in the just concluded Central Economic Work Conference on China's economic outlook next year, and what can be done to alleviate this crisis?
I think that overall, except for in some strategic areas, certainly we need to have concern of national security or economic security, and that we need to enhance our domestic capacity to supply that. Otherwise, I still think globalization will be the best way out for China and for every country. And in the global supply chain and so on, certainly it may be interrupted. But to build a trust during the crisis time and without interfering in the supply chain, that would be a much better solution than to build up across the economy, rely on everything by the domestic supply. The cost that will be too high for everyone.
So in your opinion, what will drive China's economic growth next year?
I think that this year certainly we face some kind of downward pressure. It's real. And certainly there are reasons for that. The pandemic, the precaution of the pandemic, that certainly affect the production and also the consumption pattern that put a downward pressure. And secondly, the Chinese government, in the first quarters, because the growth rate seemed to be so robust, and it gives some room for China to implement some policy which will be desirable for the long term. For example, to control the likely bubble in the real estate sectors, and also to advocate the carbon neutrality, carbon peak, and that policy for that will be desirable for the long term. But at the same time, I think the implementation seems to be need to have some kind of coordination. If you put all those long-term desirable policy and implement that simultaneously, immediately, certainly it's going to have a negative impact on the short-term economic growth. And that kind of negative impact may affect people's confidence. So I think we need to, adjust a little bit and on the one hand, firm on the long-term goals, but we need to, have a good implementation strategy about how to carry out those kind of long-term goals. I think that's for this year. And next year, I think that, some kind of government support in terms of fiscal support and monetary support for the investment in the infrastructure, for the investment in the provision of public housing, and in the investment in the new type of infrastructure, for example, 5G and so on. That will be desirable.
So, Professor Spence, what do you think about China's growth potential?
Well, China's growth potential is very high. I mean, China's avoided virtually every mistake you can make in the high middle income category. So it's, in terms of innovation, technology, it's powerhouse. But I agree with Justin. I mean, a kind of short version is, if you have a lot of long-term agenda items, don't try to do them all at once in a very short period of time. So I think, there's some headwinds. One of the things that, as an outsider, fascinates me is this challenge of in the financial sector, and this affects real estate, of preventing a kind of systemic problem, which they can clearly do. They know what they're doing and they have the resources to do it, but they also want to encourage responsible behavior with respect to things like debt and so on. And so I think they're going to, so they're trying to thread a needle in a sense. They're trying to sort of let enough people get hurt and fail on the equity and debt side to send a lesson that we're not going to bail everybody out every time, without triggering some kind of, bad outcome with respect to the economic growth. And, looks to me from a distance like they're doing a pretty good job of it so far. But yeah, there are, if you look at this, there's headwinds that are going to persist well into next year for growth. And probably one of the things governments could best do is just admit we have them and be honest with our citizens and say, this isn't going to be perfect by any means.
Well, let's talk about the U.S. economy. Now, since all eyes are on the 6.8% inflation figure for November, the highest level in 39 years, Professor Spence, how stubborn do you think the inflation will be? Well,
first, the proximate cause of this is we had a huge demand surge, right? We had accommodative monetary policy, huge fiscal programs to buffer the shock and now to build infrastructure, which we desperately need. And then we had built up savings accounts and pent up demand. I mean, everybody on the planet, who thinks knew we were going to have a demand surge, and the supply chains, can't keep up with it, even if it's optimally managed. So we have demand. We've shifted to a supply constrained economic situation, and we have, upward price pressure. The thing that the central bank hoped was it was transitory, and it's going to be much less transitory than anybody thought. Probably, well into next year. And so there is a very real concern now that inflation is going to become embedded at a much higher level. This is a complete change from the last 10 years. I mean, for all of the period after the great financial crisis, we were below inflation targets.
Right.
We couldn't get inflation rate up to 2%. Now we're in a completely different world. And I think the central banks are in a very tough position, right? Because their credibility depends on dealing with inflation, but they really don't want to bring demand and supply back into balance by knocking the demand down, which they can do by raising the interest rates. And so they're in they're in a tough spot. And what I think they're going to start to do is they've been beaten up to the point that they're going to start reacting to the inflation, whereas their previous stance was, no, it's transitory. We're going to let it run through and it'll go away on its own. And I think that's not any longer deemed by the central banks and other regulators as the appropriate stance.
Well, a very delicate stance indeed. So which one do you think is worse, tapering too fast or too slow?
I think in terms of the central bank's credibility, going too slow and letting inflation get out of hand is, from a longer term perspective, is the worst outcome. I mean, I think we ought to go down the middle somewhere and start tapering pretty quickly.
Mm-hmm. Well, Professor Lin, we know that China's monetary policy seems to be more independent at this time. China did not follow the United States to adopt a stimulus like they did after the 2008 financial crisis. This year, China lowered its RRR for commercial banks twice, and the most recent one is effective today. Help us understand China's policy response in the face of global inflationary pressure. And what do you think about the spillover effects from the United States and other countries?
Well, first, as we just discussed, China faced some kind of downward pressure in the third quarter of this year, and likely the first quarter improved a little bit. But next year, because of the first quarter this year was growth so robust, and so next year we will face downward pressure. So under this kind of situation, certainly we need to have more expansionary fiscal policy and also flexible monetary policy. And as it reflects, the monetary policy is independent, but at the same time, the monetary policy, like the fiscal policy, need to take into consideration of the economic need. And I expect, this kind of adjustment is timely, needed, and overall, as you know, most other countries, they have the zero interest rate or even negative interest rate. But China's interest rate is still quite high. And as you know, the interest rate is about 4%, among the highest in the world. And I think there's some room for lowering down the interest rate. Similarly to the reserve ratio, China's reserve ratio is still quite high according to the international standard. So I think the monetary policy still has some room to, adjust according to the needs of the Chinese economy.
Are you talking about the interest rate gap between China and other countries? Are you worried about the appreciation pressure of the Chinese yuan?
Certainly, the market will decide, the currency will appreciate or depreciate. Overall, I think if China continue to have a very high growth compared to other countries, we will see the appreciation pressure. But, the exchange rate is determined not only by the economic fundamentals, but also by the policy in other countries. Supposedly, if there's some concern about the stability of the growth in other major countries, and China is more stable, and under this kind of situation, we are going to see appreciation pressure on the Chinese currency. But overall, I think, the fundamental is more important than this kind of short-term fluctuations.
Well, most of the 2021 witnessed tensions between China and the U.S. Well, things improved a bit in November, but took another turn for the worse, it seems, in December. What's your view about evolving China-U.S. relations and impact on the future of world economy, Professor Spence?
It's a very big subject. I guess what I would say is there are significant costs, including to other countries, if we continue down the road that we've been on in multiple dimensions. So for example, the old rules of the road, let's call it in the pre-digital era, were not particularly adapted to the era that we're in. We have to rewrite those rules, and we're not really getting on with it now. So we've talked a lot about areas where we could cooperate. I mean, I think, I don't know how to forecast this, but if we stay on the road we're on, some of it's inevitable. Let me just say, I mean, in the area of the dual use of various technologies, we are going to have strategic sectors. We are going to have reviews of investment flows and stuff like that. That's normal. Maybe there'll be a bit more of it, but we shouldn't worry too much about that. But the risk of some real separation of our financial sectors, for example, because of actions on both sides. The Americans don't like the disclosure requirements the Chinese authorities are willing to accept. The Chinese, have similar concerns from the American side, delisting companies, etc. A somewhat fragile mechanism for allowing capital flows into the Chinese economy from outside using this so-called variable, interest entity, etc. I mean, there's a lot of things that are on the agenda to be shored up, and I guess people like Justin and I shouldn't speak for him, are in the category of people hope we'll just get on with sort of solving these problems by talking to each other.
Indeed. And Professor Lin, do you see a bigger risk of decoupling?
Well, first, it's a pity. We discussed there are so many challenges in the world that require cooperation in the world, especially the US and China, because we are the number one economies and the number two economies, and we are the foundation of the global economy and governance. And so it's a pity to see the tension rising, but unfortunately, it might be a fact of our life, because the tension partly related to the rise of China, and certainly China has the right to continue to grow our economy in order to improve the different standard and the well-being of the people. And because we have 1.4 billion population, if the income level in China continue to rise, the economic size of Chinese economy and its weight on the global economy will increase. That's something we cannot, avoid. And if the US see this as a threat to its power, nothing we can do. So under this kind of situation, I think the tension will be there for some time. But hopefully through the dialogue between intellectuals and also the policy communities, we can improve understanding of each other's intention. There are some areas I agree with Professor Spence. Like you have strategic concern, you can respect that because we also have security concerns. But other than that, we should cooperate because cooperation should be the way for solving so many challenging issues in our own country and in the global economies. And I hope the rationality will prevail.
Well, it's almost a year since President Biden took office, but since the administration still lacks a clear policy regarding China-U.S. trade relations, and most of the trade policies are inherited from the Trump era, despite criticism that high tariffs exacerbated supply chain crisis and further fueled inflation. So, Professor Spence, what is your take on that?
This is going to sound somewhat pessimistic along the lines of what Justin just said, but I think the foreign policy agenda in the United States is shifted from some kind of balance between national security and economic agendas to almost entirely, driven by some version of national security, and as a result of that, there's been inattention to the economic agenda on the American side, and I think the cost of that is, we're not getting on with the areas of cooperation where there's clearly not only mutual benefits, but benefits to everybody else in the world as well. So that's kind of my take on what's going on, and unfortunately, at least in Washington, this shift to focusing on strategic competition as opposed to a better balance between strategic competition and strategic cooperation is a view that's shared on both sides of the political spectrum, Republican and Democrat. They don't agree on a lot of things, but they seem to agree on this. And I think, then there's, the question is, can we shift that balance back in the direction of a more sensible, balancing of our economic interests and our security concerns.
Mm-hmm. Professor Lin, do you think the two sides should start talking again on this issue? How should the two sides engage?
I think that first, I hope people will learn from the experiences, because we know that the tariff rate on the China's export to the U.S. does not help the U.S. at all. At the beginning, they hope this tariff will help to bring the job back to the U.S., and after then showed it did not occur. And this tariff only raised, the cost of goods that the U.S. buy, no matter it's from the U.S., from China, or from other countries, and that put on an inflationary pressure on the U.S. But if the inflation cannot be really, managed, either the Federal Reserve will lose its credibility, and it's not good for the U.S. in the long run. And if the U.S. want to, the Federal Reserve want to control the inflation rate, they may have to, introduce the tapering. And if they did not manage that well, that may cause some kind of financial crisis. And certainly that's not good for the U.S. and also for the world. So I hope that the U.S. the policymakers and the intellectual communities in the U.S. will learn some kind of lesson from the experiences in the past few years and come into more rational understanding about the need to have a cooperation between China and the U.S. and for the world. And I hope, that kind of ability to learn, that kind of ability to understand the reality would be the important foundation for the policy making in any country.
Mm-hmm. I think U.S. Treasury Secretary Janet Yellen made the same point, but it seems the politics between the two sides really complicating the issue. Well, the United States and China are profoundly at odds on how economies should be governed. So what do you think about the differences? Professor Spence?
I think there are inaccurate and unhelpful views on both sides. On the American side, the view, is that China is sort of aggressively trying to expand its influence in multiple dimensions. There's lots of people who, don't understand governance, the relationship between the state and the economy in China. Because they don't understand it, they think China, because the state presence is an important factor in the growth and development in China. They kind of think they're cheating because the system's different from ours, etc. And meanwhile, we're sitting there in a relatively polarized situation in the society, and so you shift over to the Chinese side, and there's a view in China that the American system is failing. Which I think is probably a little premature, at least. and so on. So I mean, I you know, I guess the simplest way to sum this up is, you know, there is not a single right way to govern a country, right?
Right.
We have different values and different cultures and different institutions, and there's probably lots of different ways to get the job done. And I think if we want to move to a more healthy kind of relationship, you know, probably one of the most important propositions to accept is that China's found a very successful way to run its economy, and the United States one is, while we all have ups and downs, has been reasonably successful, and just accept that we're different, and that may create sort of challenges and tensions, but if we stay in this mode that we found the right answer, I'm talking about either side, we found the right answer and the other people haven't, then I think, you know, we're off on the wrong track.
And Professor Lin, what do you think about the misunderstanding about China's system mentioned by Professor Spence? Do you think China's economic policies are unfair, as President Biden and a lot of American people think?
Actually, I don't agree the economic policy in China is unfair. Maybe in some individual cases, you know, you can, if you do not agree, you can go to the WTO to have arbitration. And other than that, I think overall, the Chinese governance certainly it's different from the textbook we were taught. Those kind of neoliberalism, those kind of, you know, trust on the market, and to think any government intervention is wrong. Certainly, China is different from that. But if different that is bad, China economic performance will be very poor. China will be punished. You know, other country doesn't have to say you have a wrong policy and so on, because economic performance will punish Chinese the policy mistake by itself. But overall, as you know, Chinese economy grow dynamically. Chinese, you know, avoid any kind of systematic crises and so on. That overall, the policy in China should be considered as working well. And not only in China, if you look into the reality in other countries, in the US or in the European country, you know, actually the economic governance rely both on market and the government, right? And it's a fact. So I think what's different about China is that China did not follow the textbook. China followed the reality, and this reality, the needs of the reality, actually is quite similar to other countries. Certainly, there's some kind of cultural difference. We respect authority, and other countries, their respect for authority may be a little bit less. But other than that, the economic, in reality, the economic operations, you know, are governed by the similar, you know, governance structure. You need to have the market, and you also need to have a government to compensate the market value and so on.
I hope we can increase the understanding about China's economic system and its policies. And at the COP26 conference in November, the United States and China issued a joint statement in which they pledged to cooperate on fighting climate change. How should the two sides build on such momentum? What can the two countries do to achieve, what can they achieve by working together? Professor Spence?
You know, there's lots of ways we can cooperate. I mean, first of all, I think there's some technology that we need to kind of complete the journey to, you know, a kind of stable, sustainable global economy. A lot of that technology, and let me call them solutions. It's technology, it's mechanisms, it's incentive structures. Whatever they are, we need to have them flow frictionlessly, you know, freely and frictionlessly, you know, all over the world. And we're going to be, both countries are going to be major sources of this. Also Europe, I mean, not to leave them out. So that's an area where we can cooperate and say, look, you know, whatever tensions we have that disrupt the free flow of technology, we need to just remove them. When it comes to anything related to sustainability and climate change, or we're just not going to get there. And you know, and the second thing is, you know, there's I wish the United States was making more progress in the same way China is in putting a price on carbon and having carbon trading systems. If we accelerate that, then I think we'll have done at least one piece of the puzzle well. And so that's another area where I would think, we could sit down and have an interesting talk about how to cooperate.
Well, carbon reduction target is key to China's long-term development. Professor Lin, what do you think about the potential of China-U.S. cooperation in this area?
Well, as you can see, China committed to its policy towards carbon neutrality. Although the cost for China is substantially high because China reached the carbon peak much later than other countries. But China want to, achieve carbon neutrality. That means China need to double the effort compared to other countries. But I think it's a good thing because climate change is a global challenge. China cannot avoid that just taking care of our own domestic effort. But the Chinese effort will contribute to the global efforts. And we have so many other global challenges. Pandemic is one issue, poverty other issue, terrorism also a big challenge to the world, and how to help the developing country to really to achieve the SDGs so they can address the issue of poverty, hunger, and also have the means to cope with the other global challenges. I think all those kind of things require cooperation, and it gives me a little bit confidence. If under this tension that we observed in the past years, but we can still come to a joint statement related to the climate change. That means economic rationality still working. And I hope, build on that, we can step by step addressing one issue after another. For example, pandemic might be the next one. We can have some kind of joint efforts. And then other issues like poverty, like to help the developing country build the infrastructure, paving the foundation for their growth and job generation. And by that, maybe we can understand each other's motivation better. And we can see the growth in China is not only good for China, but the growth in China will also be good for the US and the world.
Indeed, cooperation between them.
If I could just add, this is an important point Justin made.
Yes.
Just the simple fact that the United States and China got together and were part of the agreement to attack this problem aggressively is just by itself is enormously important, because if either the United States or China drops out and says we're not interested in this, you can't solve the problem. It's completely demotivating for everybody else in the world to participate in the process of reducing our greenhouse gas emissions. So that was a major step forward, I think, and I hope it sticks. And I also agree with Justin. I mean, China still has a lot of growth to grow. So getting to carbon neutrality on a relatively short time horizon is a major commitment. I think China's carbon emissions are going to peak before 2030, which is a very important milestone in this journey. And so that's a major achievement by itself.
Indeed. Well, China-U.S. cooperation is a very positive sign, and that gives us much needed optimism for new beginnings, new hopes for the next year. Well, we have to leave it there. Thanks again for sharing with us, Professor Michael Spence from NYU and Professor Justin Lin from Peking University of China. We really appreciate it. And that's all for this edition of China-U.S. EconTalk on CGTN. I'm Guan in Beijing. Thanks for watching. Until next time. Bye for now.